Headline: Japan just wrapped a pivotal election, and conservative heavyweight Sanae Takaichi is set to steer the ruling Liberal Democratic Party's agenda. Markets moved fast. Here's what changed, why it matters, and what I'm watching next. Impact. First, the yen. It's hovering near 160 per US dollar, which is a big deal. A weaker yen typically boosts Japan's exporters. Think autos tech, so stocks tied to overseas revenue got a lift. The Nikkei 225 pushed higher as traders priced in that tailwind. Bonds? Japan's 10-year government yield is sitting around 1.60%, near multi-year highs. That level hints at a market still testing how far the new leadership, and the Bank of Japan, will go on policy normalization. If the BOJ stays patient, yields can cool. If inflation or wage gains keep surprising, yields can grind higher. Why this combo matters: weaker currency, higher yields, stronger equities. It tells me investors see continuity on growth-friendly policies, with only cautious tweaks to monetary settings. Exporters cheer the FX backdrop. Financials and rate sensitives stay more mixed, and rate volatility keeps risk managers busy. Next, here's what I'm tracking over the next few weeks. BOJ guidance. Any hints on the pace of trimming bond buys or shifting rate corridors will move both the yen and JGBs. Cabinet lineup and fiscal tone. Who gets finance and economic portfolios will signal how aggressive stimulus and debt issuance could be. FX intervention risk. 160 is a psychological line. Verbal warnings or stealth checks can jolt dollar-yen intraday. Wage negotiations, shunto. If spring wage deals land hot, that's stickier inflation and more room for BOJ to tighten later. US data and yields. A hot US CPI or higher treasuries can push dollar-yen up and pressure Japan's bonds in sympathy. Bottom line: election outcome points to policy continuity with a slightly hawkish edge. For traders, lean into quality exporters on yen weakness, hedge rate risk, and keep tight stops around BOJ headlines. For long-term investors, stay diversified, watch wage data, and let the policy path confirm before making big duration bets. That's the snapshot. I'll keep an eye on the BOJ signals and the 160 line on dollar-yen. More as it develops.